So Bruce has asked me to do a surprise appearance at the Social Media Payments Conference and talk to you guys about what's happening in the payment space. So I want to talk a little bit about the disruptive forces in the banking sector at the moment. There's a lot of talk about mobile wallet, mobile payments, daily deals, geolocation, social media integration into this stuff. You know, what the retailer's doing, what PayPal's doing, what Square's doing, what ISIS is doing. You know, this is just so many things occurring in this space that people are saying, what is the future going to be like? Give us some clear direction. Where are the standards going to emerge? Who are the key players? Who's going to win this battle? So in this context, I want to talk a bit today about the history of how we got to where we are today and the forces that are acting on where we're going tomorrow. Then talk about who the players are that are going to emerge in this process. At the same time, I'll maybe use the whiteboard a little bit, talk to you guys about some key concepts as part of this. So let's start. So obviously over the last few decades, we've had not a lot of changes in payments, except potentially if you talk about it, the emergence of the card as a payment device. Firstly credit card, then debit card, emerging to look at payments modality, particularly in the retail space. So in recent times, how debit cards and credit cards have affected this space is that the use of cash and the use of checks is now in decline. Checks certainly, cash to a lesser extent. Some of you will be familiar with Ron Shevlin's work at IT Group, and their predictions around 17% decline in cash use between now and 2016. In the UK, similar figures. We're looking at about a 20% reduction in cash use, but in the retail space between now and 2018. In Australia, between 2011 between 2008 and 2011, there was already a 25% reduction in cash use in the retail environment. So what's the impact of all of this? How does it wash out? The key thing that's happening right now is modality or utility of payments and banking is undergoing probably the biggest shift that it's ever happened. And this is happening as a result of the mobile device. So if you take the mobile device, I'm just going to remove my cover. So this is the iPhone 4S. But if you take this as a platform, obviously this has pretty much significantly changed the way we interact today with our friends in social media, social groups, the way we communicate, the way we look at the stream, such as Twitter, and the way we interact from a location perspective. So various research points to the fact that we use the mobile in apps between, say, 80 and 100 minutes a day. So the average consumer in America doing about 1.5 hour of app usage per day on average. That's significantly more than the time we spend doing email, the time we spend doing watching TV, reading newspapers. This has become a dominant activity in our day-to-day life. So it's not unusual to expect, with the dominance the mobile platform has today, that this will become a major play in respect to both banking and payments. So let's look at some of the shift here. One of the shortcomings of this as a payments device is it doesn't give us any feedback at all. You go to the point of sale and you go to make a transaction, and there's only two pieces of feedback that is possible to you with this card. The first is that your transaction's approved, that you've made a purchase. The second is your transaction's declined. That's essentially all you can get in terms of feedback from this. So when you compare a mobile phone in respect to feedback that's possible through this device, suddenly you can pretty much give any information contextually around payments. I can start to give you information about whether or not it's the right retailer for you to use. I can give you information based on context, geolocation, what purchases you've made previously. I can give you deals. But probably the most critical piece of information that I can marry from a payments perspective with this device as compared with the card is I can take this device today and I can tell you before you make a transaction how much money you've got in your account. I can't do that with a physical plastic card. So contextually, I now have all the information I need to make a decision over whether or not I should do this payment theoretically. So I've got my account balance, I present the phone at the point of sale, or I present the phone to another phone, or I use an app in store and I make a payment. So if we look at the context of payments and the ability to give you feedback or information, the mobile device is obviously where we're heading, because you can get a much richer payment experience with this device than you can with any other payment instrument available to us today. So then we get into the question of who's going to provide the rails. Is it going to be NFC, or is it going to be some other cardless technology, maybe like a PayPal or Square, with card case, or something else is going to emerge? What's going to be the dominant platform? Well, if you look at the United States, we have about 7,500 FDIC insured institutions in the United States. We've got quite a complex payment environment already. We've got Visa, MasterCard, Discover, Amex and others playing in the space. We've got PayPal, who's now been around for about 12 years playing in the payment space online and dominating really as an alternative to the card issuers. We've got new entrants like people like Venmo and Douala and Square, playing in this P2P space. So the likelihood of there being one clear emerging winner in mobile payments is a little ludicrous to think of that. It's just not possible. The fact is we're going to have probably more complexity in the payments system in terms of choices of payment provider or payment utility. But what is common to all of these solutions is that mobile is going to be right at the center of that, because it doesn't matter whether you have multiple wallets or multiple payments utility built into this phone. The fact that you carry this phone with you gives you the choice of how you make those payments. Clearly, there's going to be some benefit from attaching this to your day-to-day bank account, which is one of the shortcomings in terms of banking strategy today. Because most banks look at the technology of mobile payments as a mobile wallet, and they tend to separate the mobile wallet component from a strategic perspective from their mobile banking. So if you look at a play like Citi, and I know Rich Clow's going to be talking at the event, so I don't want to steal Rich's thunder, but if you look at Citi's strategy, their strategy for the wallet was to go with a partnership with Google, which was obviously pretty exciting, being one of the first major bank brands to look at the mobile payment space, tying up with someone like Google. Very exciting. But then on the app side, from a banking perspective, they're a little fragmented. They've got a mobile banking app where you can do transactions, pay bills, check your balance. They've got an iPad app. Then they've got a Citi shopping app. So they've got some fragmentation here. The problem is this, is that as a consumer, I don't look at my experience from a payments perspective as separate from my banking perspective. I don't think, well, there's my bank, and if I need to do a transfer or I need to check my account, I'll use internet banking for that. But from a payments perspective, if I need to pay, I'll use my card. Sure, that's the utility, but I know that this card, particularly in the case of a debit card, connects to my bank account. So I correlate the fact that this card has a balance, it has an account, and it's linked. I don't see this as two separate worlds. But banks are organised today around two separate pieces, the cards division and the retail bank division. So we've seen the deployment of solutions in respect to banking and payments follow that division of labour or follow those silos. So we have mobile banking apps and we have a mobile wallet. I think for banks really to leverage the power of mobile payments from a banking perspective, they need to have mobile banking and the mobile wallet together in one application for their customers. That doesn't prevent them from playing in other mobile wallets as well, but I think ultimately an end-to-end solution for banking requires that you have both banking and payments together. So what problem is mobile payments and these new initiatives trying to solve? Where does social media fit in? Where are the new entrants fitting in? And what's sort of going to happen in the disruptive space? Let me talk about a quick summary of the challenges that we face and how this has progressed. We started off in terms of the digital disruption of the banking arena with internet banking as a new capability. When internet banking came along, it really gave us choice and control that we didn't have before in respect to our day-to-day banking relationship. We could access our internet banking at home, we could transfer funds, we could pay bills, we could do things that normally, prior to the introduction of internet, we could only do in a face-to-face interaction. So this gave us control, it gave us choice. The second shift around mobile, we talked about that earlier, gave us the ability to do that same type of bank utility in terms of checking our balance and transferring money and things, now, wherever we were. Now there's an interesting shift here, because what we know today from looking at the likes of mFoundry or Monetize is that the average mobile banking app user will check their balance on a mobile app about 20 times a month. So they're using the app pretty much once a day. Now for internet banking, we know that most consumers who are internet banking savvy will use internet banking 5 to 10 times a month. So this is a pretty interesting shift, because when you look today at branch activity and banking activity within branch, most US consumers who have a bank relationship visit a branch 2 to 3 times a year. So the interesting shift around mobile in respect to interaction is that by 2015 or 2016, this is by far the dominant banking device or banking channel. So day to day, more people will be using mobile to access their bank than any other channel, and they'll be accessing it far more frequently. Mobile payments is only going to accelerate the dependence on your mobile device for your day-to-day connection with the bank. The problem for banks is that when you have a mobile wallet embedded in your phone, it can be tied to an account or a value store that doesn't actually have to be a bank. It could be a general purpose reloadable prepaid debit card. It could be an iTunes account. It could be tied to Facebook credits, or a Venmo account, or a Dwala account, or a PayPal account, as it is today. And if you use this at a point of sale, and it can take money out of that value store or encash it at the point of sale, then that's the core utility you want from your wallet, the ability to pay. The problem is, for banks, is you just don't need a bank necessarily to underwrite that bank account. So this is where this next phase, after we deploy mobile wallets, the next phase will be really the battle for the day-to-day bank account. And there'll be an unhinging of only banks doing payments and only banks being the issuer of a payments device or payments capability, to the line starting to blur. And there'll be a lot more disruption in this space. But that's only part of the story. Let me use the whiteboard for a second to tell you the other part of it. The other part is where we're looking at social media and where we're looking at payments is we're really trying to attack at the moment the friction that's occurring in the banking space. So you have the bank here, right? It's clear enough? Mm-hmm. And you have customers sitting outside here. So for the customer to get access to bank utility today, what happens is that there's this layer around the bank of risk mitigation. So the bank does this in the guise of KYC, know your customer compliance requirements. We have other rules around AML. And then we have things like bank policy and process. And these bank policies and processes, for example, have grown up based on a branch environment. So currently, if you want to open an account, most banks in the United States require you to fill a signature card. Now this is not because the regulator requires a signature card, this is because of bank process and policy. The regulator already has the ability to allow you to open an account without a signature card. So essentially what's happened is we've created this layer of friction, which we call rules or regulation or risk mitigation, and the customer has to get through this layer of friction before they can get access to banking products and services. The disruptors in the mobile payment space, the disruptors who are plugged into social media behavior and are looking at new technologies, this is where they're attacking. They're attacking friction in the system. So let me look at where we are in the new world. We have still the bank at the centre, and we still have the customer out here, but the customer is now enabled through a mobile device, through a tablet, through maybe an ATM machine, through internet, through a building or retailers or bank branches, through any number of different partners that could be in the mix. Okay? And the key value that's emerging is the ability contextually to understand how to supplement or create a better customer experience, a simpler user experience for the customer. This is where the real value is coming in. And sure, there needs to be the bank, and there needs to be some risk mitigation, but that can be done here. What we're having a whole lot of businesses trying to attack these different value points and give the customer a better user experience. So banking is still at the core, but we're having a lot of disruption on this customer experience layer around how we access banking products and services. Let's go back over here. So ultimately, we're looking really at a shift where banking changes from being about a set of rules or processes that we had in the old days based around a physical place to now being purely utility. Banking will be measured in the future, and payments will be measured on the optimal utility of the bank product and service. And increasingly, banking products and services will be delivered contextually based on when and where you need banking services. So this is this shift. And this is giving an opportunity for many disruptors to come into this space. Disruptors who aren't bound by those old processes and policies or those old rules, coming in and saying, we can create a better user experience. Perfect example of this, of course, is Square. So if you look at Square, Square looked at the merchant onboarding process for retailers in the United States and said there's 30 or 40 million small businesses that can't accept payments from credit cards today. And why is that? Why can't we change that? Then they looked at the merchant onboarding system and saw how complex it was to get set up your business with a merchant account. And they attacked that. They made it easier to onboard. All you have to do is download an app, plug in this little dongle they send in your mail, and now you have a credit card point of sale machine that just happens to be an iPhone or an Android phone or a BlackBerry phone. So this taking the friction out of the system really benefits the customer, the end customer, and that's where the value is. The problem is, for banks and existing payment providers, is that they now say, oh no, you can't do that. We've got rules, we've got regulation, we've got compliance, we've got legal requirements. You just can't do that. But people like Square and Venmo and Dwala and Facebook, they say, of course you can. You know, we'll still hook into the banking system at the back end. We'll still be legally compliant, but we think differently about consumer engagement. Now, as social media comes into this mix, is that in addition to changing the utility of banking, we're also changing the way we value brands in this space. So the brands that emerge as the winners in the future are those brands that have strong affinity with customers. And from a payments perspective, enabling community and leveraging of community affinity through social media becomes absolutely key. How do you get various people in the community to enable them to transact or exchange money freer and with less friction? This is part of the objective. But the other component of this is how do you then empower this group? How do you build on this affinity that you have? So the other component that we're really seeing useful in social media right now is this ability to build a brand that's socially aware or that sits within a community and is highly advocated. The problem banks have today, and to some extent the card issuers, but particularly the banks, is that people, since the global financial crisis, just don't trust banks the way they used to. Okay, they trust that the money is safe, it's FDIC insured, but do they actually trust the brand? Do they have affinity with the brand? And this is where social media has the ability to build new organizations with banking and payments utilities that are highly advocated because of the user experience, because of the way they build things simply and better for customers. So what happens? Where do we end up? Just want to conclude with a couple of comments on this. If you look ultimately at what this means, what probably will happen is we're going to have a new layer of customer experience emerge out of this, with new players that are in the payment space, wallet space, are much more connected with customers, but they still need the wires of the banking and payment system. So they'll have to hook into those organisations. So we see the likes of Citibank and others who are now building API layers around the bank so partners can come and access that core value store, that core bank account capability, as simply as possible through an API, but the customer doesn't have to have an end relationship with the bank. So when you look at models like Movenbank, what we're building, or Bank Simple, or Green Dot, or others like this playing in this space, we're trying to create a new consumer experience, a simpler model for engagement. We still need a bank partner. We still need someone to FDIC insure the deposit. We just don't need a bank charter. So at the end, what probably will happen is you'll see some full-service financial service players, some full-service banks that provide the branch and the customer experience through many digital channels, but they'll have to have pretty deep pockets. Others will be consolidated, and you'll see community banks start to consolidate around types of behaviours and become more like cooperatives. And then you'll have this ability to manufacture products and services, but you'll have a new distribution layer over the top, which will be highly mobile enabled, highly contextual, really focused on the utility of banking and payments rather than being a bank. And this will require a new layer of regulation to some extent as well. But ultimately, this device is probably going to bring about the end of banking as we know it today, because banking as a place is just simply no longer important when you measure the utility of banking by how you get your banking done. Banking moves from being somewhere you go to something you do. And ultimately, how you enable the do through a community experience, through getting rid of the friction, through making it easier for customers to do stuff, that's the value of the emerging banking and payments environment, not the fact that you have a bank charter or that you're heavily regulated. That offers no protection and no value to the consumer experience at the end of the day. So that's my thoughts on social media and payments and how it's going to affect the industry moving forward, and I wish you all the best for the rest of the conference. Thanks for your time.